unenviable task, Steve, of getting us up to speed. Where do we start?
I'll try to unpack it. It's a complicated story, obviously. So we already know that Evergrande had defaulted late last year, one of 6 main developers that had defaulted, and it has big bills coming due. In fact, yesterday there were coupon payments in excess of $350 million US. There's many more other payments that are due this month. So they have a lot of bills to catch up on, and there's an ad hoc group of foreign creditors, bondholders, and Evergrande notes concerned that there's been a lack of transparency and opaque decision-making in this debt restructuring process that Evergrande has embarked on with the guidance, of course, of the Chinese government. They are urging, they're saying that they could take enforcement action to protect the interests of creditors. However, Evergrande is countering and saying, look, we're in the middle of this debt restructuring, not in the middle, actually, just at the beginning. They need more time. They say that they are in active and credible negotiations and discussions on this restructuring plan. So they're at a standoff right now. So we'll have to see if these foreign creditors who believe that they are perhaps at the low end of the priority queue on repayment, if there is repayment at all. We did get a bit of a bounce yesterday on some of these property stocks. Evergrande was higher. As you can see, it was in the pre-market, it was up about 1.6%, but now down a couple of pennies, Hong Kong cents, at down 1% today. It's a negative sentiment right now still in this property space, even though asset sale talk is starting to heat up across the sector.
Yeah, and you mentioned Shimao dollar bonds at least are rising just a bit here this morning. Steve, I'm just wondering, it seems as though the Chinese government prefers these so-called asset sales as the best way for these indebted developers to ease the liquidity crisis. What's Shimao doing on that front?
Yeah, well, the big question, of course, asset sales with these developers, and we'll take Shimao as an example because Caixin magazine was reporting that they have 34 different projects across 17 different provinces and municipalities across China up on the block. The key is going to be the price, right? They're asking for upwards of $6.7 billion US for 15 of these 19 or 34 projects that are said to be on the chopping block. The other 19 are said to be in joint ventures and also at the initial planning stage, but still, they've, according to Caixin, poured about $5.5 billion US into those other 19 projects. So that's, more than $10 billion, worth of assets that potentially could be sold. And preferably, according to the government, would be state-backed developers. So that's perhaps the model that the government is taking. If you have assets to sell them to the, those government-backed property developers that probably have a bit more of financial backing than these private developers who are kind of locked out of the bond market and are having severe liquidity crunches right now. Bloomberg Intelligence has a take on this. They say asset sales and policy support from the government could be Shimao's last hope of pulling itself back from the brink of default. And that big money number that I just talked about, Bloomberg Intelligence says much of that money is already pledged to other financing. So they're not necessarily, even if all those sales come to fruition, they're not necessarily going to take in a big chunk of cash.